12 important rules of investing that'll make you rich. Investing is a difficult undertaking. It requires a lot of foresight, time, and patience. But there are a few important rules that have always worked in the past and will continue to do so in the future. People who invest successfully know that there are just a handful of rules that, if followed, will lead to financial stability. Stocks, bonds, mutual funds, futures, retirement plans, stocks options – these are the different types of investment strategies that you can choose from. All of them have their own positives and negatives. But there's one thing they all have in common: they require the use of money to make a legitimate profit. When you invest, you are actually lending money with the hope of getting the original investment back with some extra profit. There are many people who would like to invest in something but don't know how to start. If you're looking for ways on how to start investing, then this video might be helpful. Welcome to Stocks Galore, the place for those in passionate pursuit of financial freedom. Smash the like button now and subscribe to the channel to be notified when new videos are released. Investment strategies are not one size fits all. The type of strategy an investor chooses depends on their risk tolerance and budget constraints. The higher the risk tolerance and the more time an investor has to wait for a return on investment, the greater his or her potential for profit. The best investment strategy for you depends on what your goals are and how much time you have to invest in your financial future. Here are 12 important rules of investing that'll make you rich. Rule 1. Buy low, sell high. This rule applies to many aspects of life, and investing is no exception. The general idea is that the worst time to buy stocks is when they are at their highest point, because they can only go down from there. Likewise, it's best to sell stocks when they're at their lowest point, because they can only go up from there. Rule 2. Diversify your portfolio. This rule applies to any kind of investment, and you should never put all your eggs in one basket. Investing aggressively or conservatively doesn't really matter. Rule 3. Don't lose money. Invest in a low-cost fund to diversify and protect investments. A low-cost fund is a type of mutual fund which is made up of stocks that are less risky. These stocks typically carry lower premiums and offer less return on investment. They are developed to diversify and protect investments. Low-cost funds help investors stay in the market for longer periods of time, as they provide more stability and reduce the risks associated with investing in individual stocks. Investing in a low-cost fund can lead to better long-term returns than investing in an individual stock. Investing can be risky, but it doesn't have to be if you invest wisely and manage your long-term goals accordingly. Rule 4. Keep investments costs low. Costs matter. Many investors feel the need to invest in order to make more money. But there is a high chance that you will lose your original investment if you don't know how to manage your investment's costs. Investors should be aware of the effect of taxes and fees on their profits and take diversification into account when making their investment decisions. Also, they should try not to become too emotional when investing, because it can lead them into making bad decisions that will cost them in the end. Rule 5. Diversify your portfolio with different asset classes and differentials in risk and return. Investment managers differ in their allocation models and how they diversify their portfolios. There is a lot of variety and many ways to go about it. One way would be to diversify your portfolio with different assets classes, which can include stocks, bonds, real estate, commodities, currencies, and so on. Another thing you can do is to diversify your portfolio with differentials in risk and return, which includes any combination of these asset classes, such as stocks and bonds or stocks and real estate or whatever else you see fit. Investment managers differ in their allocation models because their investment strategy depends on the investor's goals, risk tolerance levels, time horizon, time frames of the investment, etc. This makes it difficult for an individual investor to know what they should invest in without analyzing these factors themselves. Rule 6. Never punish yourself with high taxes. Many people are afraid of taxes because they believe that they will have to pay a lot of money to the government. However, this might not be the case. If you know what you are doing, then you can actually reduce your tax liability and never have to worry about it. High taxes can do a lot of damage to our economy and society as a whole. They can discourage people from working hard and save because they feel like every penny they make is going to go straight into somebody else's pocket. We need to make sure that we stop punishing ourselves with high taxes if we want the economy to grow and for society as a whole to prosper. Rule 7. Keep your costs low when selling shares to minimize capital gains tax. You can save a lot of money on taxes if you know how to keep your costs low when selling shares. Here are some tips to minimize the capital gains tax. Investors can avoid paying taxes by keeping their costs low. There are 3 ways to do this. 1. Sell your shares at a discount. 2. Pay for the other costs associated with the sale. And 3. Sell high-quality securities that were purchased for less than $10,000. Rule 8. Exercise a lot of patience. To be a successful investor, you need to have patience and discipline. You also need to know what you are doing, which is why it's important that you find out more about this before you start investing. Rule 9. Think long-term. Investing in the stock market can be a long process, which means that sometimes it pays off and other times it doesn't work out so well. But if you are patient enough, you will eventually get there. Rule 10. Start small. If this is your first time investing in the stock market, then try not to put too much money into it until you feel comfortable with how things work. Rule 11. Set a goal and never lose sight of it. It is said that the best way to succeed is to have a goal. A goal has the potential to bring about achievements because it gives you a clear idea of where you are heading. It helps in achieving your goals, which can be achieved in stages, making your goals easier to achieve. Rule 12. Have a plan for your money and stick to it. A lot of people have a hard time sticking to a budget and saving money. This is because they don't know how much money they make, the amount of money they spend, and what their savings goals are. It's important to know where your money is going and how much it should be going in order to set up a plan for your financial future. Bonus rule: risk is par for the course, but keep it at bay as much as possible. Risk is a part of life and everyone has to face it. It is important that we know what risks we are taking and try to minimize the consequences as much as possible. We should not be afraid of the consequences, but instead, we should prepare for them. We can minimize risks by making sure that our investments are spread across different types of assets, so that 1 or 2 types will not fail us if they happen to go sour. We also have to take care of our health by eating healthy, exercising regularly, and sleeping well, so that it does not affect us in a negative manner when the unexpected happens. Here's a pro tip: don't chase the market upward or downward with everything you have. It's not a wise move, and it might leave you out in the cold and without any money. Lastly, always keep your eyes on the prize. The following are do's and don'ts to keep your eye on the prize. Don't focus too much on short-term gains. They are just distractions. Don't chase after money. It's not worth it. Don't sacrifice your health for anything or anyone. Don't live in the past. Focus on what is important now. Do be true to yourself and have faith in your abilities. Do find ways to enjoy life outside of work. You deserve it. Do enjoy the journey because you never know where life will take you next. If you enjoyed this video, smash the like button now and subscribe to our channel to be notified when new videos are released.